Good evening and welcome to Mortgage Coffee Talk. My name is Tahir Qureshi. I'm your host. Today's topic is mortgage rates prediction for 2020 and 2021. Currently, we are a historically low rate. The Bank of Canada is at 0.25% rate, and there is not much room to drop further. Bank of Canada has financed and bought back lots of mortgages from the local banks, billions of dollars. So there's not much room there left to reduce the interest rate. So my prediction is going to continue to stay 5-year fixed close to or below 3%. And depending on the credit score, depending on the individual profile, creditworthiness, income, the rate being offered by various banks, they are very competitive. They look at the profile, they look at the relationship, and they tell you what they're willing to offer. Historically, based on the relationship that you have with your bank, that will provide you the best offer. So my prediction is that cost of borrowing, it all depends on your income, your creditworthiness, your relationship with the lender and the bank, and you are able to, and you have a good score, credit score, you have verifiable income, and you have a long relationship with your bank. So now, a couple of things that come into mind. Am I ready to buy a house? As you know, I'm a licensed principal broker. My license number is MO8002130, and a principal broker for Canada Express Mortgaging license number 13241. I'm also real estate broker of record for City Pro Realty Inc. brokerage. I have 6 designations in real estate. highest in Canada is Fellow of Real Estate Institute of Canada, FRI, and the United States is Certified International Property Specialist. My passion is to help you to achieve success. Now, you need a mortgage because you want to buy a home. So the most important comes to your mind is where I stand in terms of state of your financing. Because if you are considering to purchase a home and you want to eventually apply for the mortgage, do you have cash set aside for down payment? That's the first question comes to you when you're seeking a mortgage. What is your source of deposit, down payment? One down payment that you make is when you're buying a property and you put a deposit to acquire a property. That deposit is part of the total purchase of the property that you're negotiating an agreement of purchase and sale. But where is this money coming from? Have you saved this money and you have the ability not only to have the funding, you are able to afford it. So not only you have the deposit that you're going to put down toward purchasing a property, and you have your own sources of saving. Because bank wants to know that you are planning and you have been planning to raise funds and do saving, cut cost and do saving to put down your own money for purchase of the house. Because anytime you borrow a money from a friend or a family member, that becomes part of your loan, a liability. It reduces your amount that you can borrow from the bank. The other thing that comes together with the deposit, let's assume you have the deposit that you can buy you can put down, then it becomes the affordability. Can you pay the mortgage that you want to buy? And obviously, mortgage payment is contingent about the amount of the mortgage, the terms that you negotiate. Is it a variable? Is it a fixed? Is it 1 year fixed, 2 years, 3 years, 5 years? Are you paying weekly, bi-weekly, accelerated bi-weekly, or monthly? And how this coincide with your income, which is coming from a paycheck or from the business that you're putting in to make sure you are able to pay the mortgage. It's very, very important, because you will be taking a significant risk if you secure a mortgage through whatever means you have, and then you are not able to afford it to make the payments. And you will lose all those if you go on default, because the lender has the right to put you on power of sale if you default on your payment. So it's important not only that you think about arranging a deposit, you also sit down with the mortgage broker and talk with them candidly, disclose your situation, look at your income, and then you'll be able to, as long as you are able to afford it, then it's a good deal. And banks are strict now. They collect all this information to make sure you are earning. If you're an employee, they will want most recent pay stubs to verify, letter of employment to show that you're a permanent employee, because coronavirus, lots of people are unemployed. And they're very, very careful, because there were close to 600,000 people across Canada have applied for deferred payment. 600,000. That's a lot. So it's very, very important that you understand that. And you make a wiser decision when you're thinking about mortgage. And there are type of mortgages: variable, fixed mortgage terms. Under these circumstances, I think you have the best rate. If you have done a good saving, this is the best time to buy it, because you will get the lowest rate through your bank. Anything below 3% is a good rate. So it's very, very important for you, not only that you have a saving, and you also sit down. If you have a question, give me a call. I can help you. You can call 905-785-9926. I'd be more than happy to answer your question. If you're watching and listening, call my number, 905-785-9926. I'd be more than happy to answer your question. So, important thing is that impact of economy, especially our neighbors' country. If economy impact them, it impact us too because we do 70-80% of our trade with them. And the coronavirus is a very unique situation where it's very, very strange. People are rethinking about their strategy, the goals and job and planning. It's very, very important for you to think how you're going to survive. This is the time to survive in 2020. Now, third point that coming to is financial stability. This is very future. Stability of your future, financial future. So you need to determine when you are trying to buy a house, should I buy now or should I wait for the future? It all depends. If you have done the first step that you have a mortgage, you have down payment and you know you can afford the mortgage and you already calculated, then you may consider going it because there are plenty of opportunity. If you have changed any jobs recently, that might put you into a situation where stability may be a challenge because you might be in a probation period and you have to complete your probation period. So it may be a good idea that you wait before changing jobs. I always recommend if you have a longevity with the employer, if you have to buy the house or arrange a mortgage, do it. Then change the job. Because creditor, lenders, they look at your longevity, how stable your job is and how long you've been working for the employer. They like to have at least 1 or 2 years with the new employer. That means to show them a comfort that there won't never be a cash flow problem because you have a regular permanent job. Sometimes the lender will require a letter from the employer to saying you are working 40 hours a week, a regular employee of the company. So this is very, very important. Do not buy the house or go into borrowing money when you are in a process of switching job. You must have sufficient saving in your account to make sure you are in a position to pay due to contingency. Sometime in the family, somebody gets sick, they have medical issues. You might end up giving some money to them. So you have to think about all that scenario as a financial stability in your future before making a commitment or buying a home and getting the mortgage. It's always become handy if you have emergency or contingency funds that you set aside for your family. Coronavirus was a surprise. None of us was well prepared. And we faced challenges. Our Prime Minister and Ontario government, because I reside in Ontario, they did a lot of efforts. Federal government have poured out so much money to make sure that even though we are shocked with this social distance lockdown, we still are able to buy things because federal government has given $2,000 to all eligible people who didn't get a UI or employment insurance or EI, sorry. And bank, some employees was paid 75%. The federal government doesn't want them to lay them off until the lockdown is lifted. So I'm very glad that our governments have really stepped up and supported that. So you keeping all in mind, always set aside cash fund for emergency because it comes handy in the circumstances. There you can handle contingency due to emergency. It's very, very important for you to have that. Then the most important thing, again, is your credit score. When you are asking for a mortgage and you want to maintain a good score, I have recently a client that I have secured a mortgage, good rate, good income, and banks, based on the income, everything is verified, and they're happily to do the financing. It is prudent upon you that when you are building a future for your family, buying a home is the most expensive and critical decision you make in your life to put shelter on your family. They deserve it. It gives you lots of pride and happiness to have your own home and you grow your family. It's a very happy time, but also you want to make sure you have worked for it, save money, and you have sat down, come to me, give me a call. I can help you that. To make sure that you have set aside funds, I can help you to make sure that you make the good decision. And when you have the money, you have a down payment, you already calculate the mortgage, now you're ready to go and buy the property, and you select the real estate professional to help you negotiate the deal. Last 3-4 days been very busy for me and helping our clients to buy and sell. We did quite a bit deals. So then you are negotiating. Now you're looking for community, the area, depending on the family's children's school requirement, close to the hospital, close to the fire station, water hydrant, or nice neighborhood, depending on the value that has been mortgage that has been approved, so you can buy a proper home. The most important thing, again, after that, verification of income, cash, and everything is credit score. How responsible you have been when you've taken the business cards, credit cards, line of credit in the past, and you've been paying it on time. Because now credit score is going to matter. The bank, if you have 700 and up, that means you are a good score. So once in a while, go to Equifax, go to TransUnion, and get them to give you the print out the report, pay them $14 and get a report and find out they have the correct information about you. Sometimes they put some records are mixed up because of somebody else has mixed up their credit because of name, their similarity with the name, and they can pull out a bad report. So it's best that you check your report every 2 weeks, every quarter at least, if not bi-monthly. Especially when you are buying a house, if you can print out your report and you are able to sit down with a mortgage broker or agent to discuss your mortgage requirement, he can guide you. Once you give consent to us, we will get the report. But it helps you to prepare yourself. The critical code is very important. If you have 720 score and above, you have a possibility of getting advantage of getting a good rate. So that means the credit scores matter. Paying down, the best thing is to help pay down your debts, reduce the debt as possible. If you found some irregularity in your credit report, fix it, because that helps you to get a better mortgage. And make sure you make payment on time regularly. And also avoid applying for new credits and when you already secure a mortgage, applying too many places for different credits, some departmental credits, it will drag your score down. So if you don't use it, get rid of it or go to minimum limit. It's very, very important. I would recommend that when you have bought a house, you're moving into the house, do not use additional credit cards, other way of borrowing money from the furniture stores or other electronic stores, because it will drag your score down. What is the current market condition in the real estate? This is very important for you. So what you need to do is select or contact various realtors in your area. Ask them to give you one-on-one through Zoom an update on market condition. Is the market going up? It's going down. Recently, my team was involved with buying some house in Milton. I tell you that smaller home, I would say if you're looking at condo apartments, 500, 550 and up, condo apartment, 2-bedroom. Or you're looking at townhome, 750, even 800. Semi-detached, similarly, 800, even higher. Single garage from 820 to 900,000. It all depends on the condition of the property. Good credit score will help you, but are you prepared to make commitment for home ownership? You may have to sacrifice a lot. Cut down your international travel because of coronavirus. We're not going anywhere. We used to travel, go out of the city, rent a hotel with the family and enjoy the weekend. We cannot do that anymore until lockdown is lifted, and still we have a fear of mind because enemy is in the air. And I don't know how long it will last. Would it come back second time in November or this winter? Predicament is that yes, it will. So our life is change. We have to think about how we're going to survive. All job requirements are changed. You know, big office building, we have lots of property management and certified property managers came to our various shows that we have, and they predicted that even though they're loosening up, some big clients are still maintaining the properties, but there will be lots of empty high-rise buildings because business is not as usual. The most important thing, your commitment is number one, that you are able to pay the mortgage. That's number one. The other important thing is repair and maintenance. You have to invest money to repair things. Let's assume that your air conditioning doesn't work. I have a problem with a brand new Samsung clothing dryer. Called the guy, he came in, he replaced few parts. They said $300 with taxes. So you can expect that if the condition of the house as such, when you bought the property, there's going to be repair required for the equipment because there are moving parts. So heating, you have a cooling, so you have air conditioning and also your furnace. Because you have a blower that is moving part and it can affect. Washing dryer can go bad. In the kitchen, appliances, fridge can stop working. If you have a gas stove, then the stove have a problem with getting the gas. Dishwasher is the same thing. Or microwave you have. So these are the repair related, equipment related because they're moving part. And sometimes this all come at one time and you're not prepared for that. So it's a part of the commitment of the home ownership, not only to make sure you have funds to take care of the contingencies, most importantly, you also have to maintain your landscape. We have hired, because a little bit wider lot and lots of grass, and as you grow old, you don't have the energy to go cut them. So we hire a landscape guy to cut the grass to make sure the appearance of the house looks good from outside. Nobody comes inside the house, but people look at outside. It's well maintained. So you have to maintain your landscape. So that's part of the repair and maintenance of your house. If you have a pool, you have to keep it clean. If you have a pond, you have to keep it clean. And this is where it's important for you to have contingency funds. So the reason I was talking about is that so far, the rate are the lowest available in the marketplace. I do not expect the mortgage rate going up. If you are able to bargain the mortgage rate now, it is best that you secure the rate. Banks are giving 90 to 120 days to protect your rate. And they give you a letter of commitment that you can secure. Because of coronavirus, I believe around 150 to 200 billion dollar of mortgages was bought by federal government from the banks. So the bank is not only subsidizing and helping the public to maintain the ownership without getting into default, and people still wants to buy the properties because of low rate, it's very likely that the banks will tighten up a little bit grip on rates. But I still feel that it will not be going more than 3% until mid or end of 2021. It is very likely that any rate will change this year. Because what happened is the banks suffered in a sense that lots of people either went default, they went under deferred payment, so they have to absorb the cost because not able to collect money. And plus they want to make sure cash is flowing, so they sold their asset to the federal government and they start lending money. But at the end, it's you. Are you prepared to take the mortgage? Are you prepared to take the risk? Do you have sufficient down payment? Do you have stability in your job? Do you have understanding what's happening in the marketplace? And have you engaged a real estate professional to help you, to give you the market report and how the credit is working? Make sure you have a stability in your income. That is the key to fundamental success and successfully maintaining the ownership of your future home for your family. Keep some contingency funds to support for maintenance support, maintenance and repair. And in case you decided to improve, changing the hardware, granite countertop, lights. Make sure you little bit delay those process a little bit longer, and when the whole economy comes out of the woods. Yes, this is the best time to buy the property. If you have been responsible, you have saved money, and you have set aside funds for that purpose, you have understanding how much mortgage you are expecting, you sat down with a mortgage broker, you have calculated your monthly expenses, and you have stability in your job, you know what you're doing. Do not jump into buying a house if your financials are not figured out. It is your responsibility, regardless who you engage. You must demand figures in writing. So make sure you are take advantage of the situation where you can get a better deal for your buck, buying a home and also getting the financing. Final word for tonight, the mortgage rate prediction. It's very unlikely the Bank of Canada will reduce further. He'll be very surprised if they do, because there is no room to go down, because no one works for free. So 0.25% is the Bank of Canada rate that every bank borrows the money. Most cases, the line of credit, if you have a good bank relationship, you are able to get line of credit about 2.49. Depending on the mortgage, 5-year fix, it can range from 245 to 275. And when you are looking for rate, to make sure you look at the whole picture. Rate is not the only factor, because when you fix the term of the offer, it will affect you in case you decided to sell your property. Make informed decision. Make a good choice. Make informed choice. I'm a mortgage principal broker of Canada Express Mortgage Inc. If you want to learn about the mortgage, some definition about the terms, you can visit our website, express-mortgage.ca. There's a wealth of information for you to understand the mortgage. And if you have any questions regarding the mortgage, I'm more than happy to answer your questions. My number is 905-785-9926. My cell number is 416-451-3489. I take this opportunity to thank our doctors, nurses, police officers, and all those essential services serving humanity, serving fellow Canadians in this coronavirus. May God accept your efforts. May God keep you, all of you, and all of us, our family, friends, and our community, all Canadians, safe from coronavirus. May God bless Canada. Thank you for watching, and our next episode will be next Monday at 7 p.m. If you have any questions, you can watch this program on realtycoffeetalk.com or mortgagecoffeetalk.com. Please do not forget to subscribe my YouTube channel, Tahir Qureshi. Thank you and have a nice evening. Bye for now.